Welcome to FinanceFeeds podcasts. FinanceFeeds is the world's premier interactive Forex industry news source, providing the latest insights and current affairs from within the online trading industry worldwide. Enjoy our latest podcast episode. Hi, everyone. Welcome back to FinanceFeeds podcasts. My name is Nikolai Isayev. I'm joined today by James Glyde, who's founder and CEO of PipFarm. James, welcome to our podcast. Thanks for joining us today.
Yeah, thank you. Thank you for having me. It's a pleasure.
Likewise. So I wanted to jump right in since you are an expert on this topic. 2024 could well be seen as the year of prop trading. And I wanted to ask you personally, what led you to launch PipFarm and what makes it unique and stand out from the rest?
Yeah, well, it's a sector that I've been working in for a very long time. The past 2 years, I've been heavily involved in a few prop firm projects and seeing all of the good ways, good practices, some of the things that could be improved on. I saw a pretty unique operating model in terms of risk management, how we can work in this very risky product offering, because if you think about how a brokerage works, you have the margin from the trader, but in this model, you don't have that, right? So you're kind of taking maybe 10 times more risk than a traditional CFD broker is taking, because the kind of capital or the assessment fee that you have from the user is very disproportionate to the amount that you're potentially risking. So the risk dynamics are heavily skewed, which makes it very complicated to manage. But having experienced how to handle this within other prop firms and projects, I think there is a very good way to handle this, to manage this. And I only know a few other firms that are doing it this way, and they seem to be doing very well. And it doesn't have to be at the disadvantage to the trader by offering a less compelling, less competitive, less useful product. So being able to give a good product, a good experience, and also operate a business that will be sustainable, I think is already on its own a huge competitive advantage, because we're seeing, quite a few operational issues occurring in the industry. So this is one of the reasons why I was really keen on starting PipFarm. Besides that, I have a very, I think, and other people have confirmed, very cool product vision. And again, something that isn't really done so far. Almost even unique in the finance industry, because, some people see the prop trading industry as being advantageous because of the lack of regulation, in the sense that some people see that benefit in different ways. And I guess it depends on the character of the person and how they interpret that benefit. But some people see it as, there is no one telling me what I can't do, so I can do whatever I want. There is no best execution requirements. So we see traders getting really concerned about that. So that's one advantage other people see. Another one is the cost. You don't need to have huge operational costs on compliance. That's an advantage that I see. So the startup cost is much lower. And then there is the marketing. So there are different types of marketing. So one is bonuses, incentives. Everyone listening already knows how prevalent that is. And then there is things more related to the product side of things, which is where I'm really keen on developing, which is rewarding users based on experience, So it's not, here is a free account if you tag me on Twitter, for example. That's a very aggressive incentive and something that I think is not a very good practice. But then what we're exploring is more experience-based perks, features. We call them power-ups, kind of going into the gamification. So the big advantage that I see in this unregulated environment is we can gamify the product quite a lot. And that's the angle that I really want to pursue quite heavily.
Very interesting. I think you make a lot of really good points, and I think we'll definitely touch upon a lot of these as we go on along in our discussion. Now, you're one of many founders who are managing these types of businesses. And I always ask each one of them, should we refer to this type of business as a funded trader firm instead of a proprietary trading firm? Or are these two expressions interchangeable?
Yeah, they're not proprietary trading firms. And we can say that they are, but they're really not, because what a proprietary trading firm is very well defined, has been for decades. So calling it something it's not is a bit of a misstep. Funded trader firm is a good name. Evaluation firm, trading evaluation firm is also a good term to call it. And are they interchangeable? I wouldn't say so. Proprietary trading firms are very different because you have firm capital and people are really trading that capital. And the reason why it's important to make that distinction is not just because of what goes on behind the scenes, but if traders really are trading real capital, there are questions about whether they should have a fund management license if they are actually managing third-party funds. And again, it's an unregulated industry for now, and packaging it in a way that you have this regulatory question, then it's another misstep, I would say.
I was wondering, what's your perception of why did it come about to be called prop trading? Kind of, what's your thought on why are so many people in the industry, or why so many firms that are conducting this type of business calling it prop trading?
Maybe for lack of a better name, and also it's important for the feeling of the user. The user feels like they are managing capital. So I would say from the user's perspective, it's very different. It's very similar to being a prop trader, right? You have this account provided by a firm. If you pass the evaluation, if you make some money, you have a percentage, a claim on a percentage of that profit. So from the user's perspective, yeah, it's pretty much prop trading. But from the firm's perspective, it's far from it.
Good point. Good point. I wanted to talk a little bit about the actual traders that are joining PipFarm today. What's their typical profile? Because, like you said, you are focusing on, your model is different from other firms, and it does focus on incentives, experience incentives, and I think you call them power ups, right? Kind of, what's your typical profile of a trader that's joining PipFarm?
Yeah, good question. So we recently did a survey of our small but still growing community. And what was interesting about the demographics is half of our users came from what would be considered a low income bracket, and the other half came from a high income bracket. And there was one or two respondents in between, which was like very, very weird. And I think that kind of tells a story. So this product seems to be attractive to people who don't have a lot of capital to trade or invest, which is one of the main selling points, appeals to this product. And the other category are people who are experienced and kind of understand the mechanics of this product and use it to like optimize their capital usage, right? And what we also see is a lot of traders are using trade copiers. So people, they buy the biggest account that we offer, and they are also using the biggest account that other firms offer. So they are pooling collectively this kind of max allocation with all these prop firms. So they are really optimizing their capital.
And you mentioned that as part of the survey, you found out that, low income bracket and high income bracket. Does PipFarm offer different experiences based on your, let's say, income level, wealth, and or trading experience?
I wouldn't say so. It's just the bands of the product. So we start with a 5K product, which costs about $60. And, from time to time we have promotions, but it's $60. And then we have up to 100K package, and that's $550. So there is a big range in the capital and of course the price. And it basically allows people from not just different income levels to use the product, but also people to try a new firm without feeling like they're risking a lot.
And in terms of the user experience, it's all equal. All users are equal in terms of whether you sign up for this package or that package. In terms of the trading, let's say, setup or the trading characteristics that you have available to you.
The literally only difference is the amount of experience points you would earn for the purchase. So with a 5K and 10K account, you would get 1 point. With a 100K account, you would get 3 points. After that, it's all the same. So we reward points when you pass the evaluation, when you do KYC for the first time, first and only time, when you scale. So every 30 days, the user can scale to get 50% more funding. So that would actually be another difference between the account levels, right? Because 50% of 100K is not the same as 50% of 5K. So the scaling increments are different, and the experience points that they get, whether they have a 5K or 100K, is the same for each milestone. So it doesn't matter if they pass, we don't differentiate. It's only the initial payment. So that's more like a loyalty reward rather than an experience reward.
I find it interesting that you mentioned, robots or programs that let you copy trades and things like that. Me, perhaps not being as well versed in this part of the industry, I would think that firms would not want traders to use things like copy trading or we used to call expert advisors on Meta. It's not like it's giving them an advantage of some sort. They're not sort of self-directed trading. They have a program running to conduct the trading, or at least assist them in trading. Are we speaking more about a trader who is, let's say, well-versed or experienced enough in coding or something like that, where they would write their own software to use for trading? Or is it a matter of purchasing a certain product out there that we know many exist today that let you essentially automate your trading if you're a self-directed trader?
That's a good point, actually. So we do have a rule that users cannot go to the MQL5 marketplace and just buy an EA, for example. How can we know that or regulate that? Only if two people are using the same EA. That's the only way we can actually find out. But we do have a rule that says, please don't do this, And if people are respectful and they really want to use this product for what it's designed for, they wouldn't do this. Obviously, there are people who don't look at things like that. And we try to observe the trading environment continuously so we can isolate people who we think are not doing what we recommend, and we can politely ask them to either stop, change what they're doing, or say goodbye, basically.
I see.
So the copy trading is also another term that has been repurposed in this industry, because probably you and I, when we think of copy trading, we're thinking of eToro, Zulu Trade, these kind of tools, right? And this is
Exactly.
like not okay, because we're looking for unique trading strategies, and we don't want 50 guys all doing the same thing, because there's going to be huge concentration risk issue for us. So we say no copy trading, but the trade managers, and I think it's fair to call them trade managers or multi-account managers, this is fine, because if I want to have a 100K account at 5 different prop firms, that's actually better for the prop firms, because you are distributing your strategy across different firms, which for the user, they have less counterparty risk. And I think that's a smart thing to do. They also will get better execution, because the bigger the orders, the more slippage they're going to face. So it's in general a smart thing to do this type of copy trading. So managing multi-accounts with a multi-account manager. And I don't think we will experience any problems with this. The problem that some users are facing at the moment is, to run these systems, there is like a common IP address, right? So you use one online service and everyone is using the same IP address. And some firms use this for their internal fraud monitoring systems. Not like that's the only thing they check, but it's one of the pieces of data that they have to examine how people are trading. And this is one problem that is kind of hard to deal with, because you take away the ability to identify a trader. But I don't see that being a problem for us. And I do fully endorse traders to use multi-account managers.
Very interesting approach. I wanted to touch base on the platform and the trading technology that you use, because I know that PipFarm chose cTrader as a trading platform instead of the very popular MetaTrader 5. I'm wondering, what drove you to that decision?
Yeah. Well, that was a very good decision in hindsight, because, what happened. So when I started thinking about this project, it was always going to be cTrader, right? My background, I was working at cTrader for several years, and I know this platform inside out. It's the only platform I use for trading. And for me, it's being able to sell the product. If you can't relate to your users, if you don't love the product that you're selling, you won't sell it very well. So for me, it was a very easy decision to use cTrader. Not only do I understand it and know it very well, but I know that it's been, the term I guess is battle tested, right? It finished its phase of being a new platform a decade ago, right? There are no issues with lag or server issues or downtime. It's a incredibly stable platform. So using this as the basis of the business, because cTrader is the basis of everything, right? Because we do have this ancillary service, which is an engine that monitors all of the rules and enforces the when traders reach the daily loss or the max loss, or they reach the profit target. We have this engine that is monitoring everything. But where does it get the data? It gets everything from cTrader. So every price update from cTrader gets passed to the engine. And then if there is something wrong with cTrader, there's something wrong with the engine. So I wouldn't have the confidence to do this on any other platform except for probably MetaTrader 5. Choosing cTrader was a very easy decision for me. And at the time, the idea was to be the second cTrader prop firm. And that didn't go as I expected. Now almost every prop firm has cTrader, which on one hand is fantastic, and I'm really happy about that because it was about time that more traders knew about cTrader, and it's a very cool experience to see even more adoption for the platform. But then a huge competitive edge was lost. So that's why the product side of things, like the power ups and the experience points, I really have to double down on this to have some differentiation from the competition.
Well, it's interesting that you say that because there was like a mad rush to basically onboard a different trading technology for many existing firms, as we all know. And I even remember, I think it was probably October, November of last year when I saw a rush to, let's say alternative platform providers outside of your traditional MetaQuotes product. But the other thing too is that for me, I'm not a trader, but what stands out to me from a technology standpoint with cTrader is flexibility, and not necessarily flexibility maybe with how the platform is set up, but with the various types of connections that you can connect cTrader to, right? So you can connect cTrader to many customer-facing apps, back-end apps, payment systems, and things like that. And I remember when speaking to Spotware executives last year with regards to the service, as far as I understood, it went through a really, really big technological revamp in that specific sense, in terms of its flexibility to be used with many, 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 many other systems. And in my mind, correct me if I'm wrong, in my mind, that sort of made cTrader one of the leading alternatives to MetaQuotes when it comes to funded trader programs and dare we call them prop trading firms, and kind of made it that much more attractive to these types of businesses, which led to mass adoption, which you just mentioned.
Yeah, so they've done a lot of work in making this like whole product solution. And it was a long-term strategy, and it took them many years to do it. Like I was even involved in this when we first started working on it. And it was a hard decision to make early on because of this like duopoly of platforms, right? There were very few brokers that didn't have MetaTrader. So if you're building these ancillary services that like plug into cTrader, but don't plug into MetaTrader, then there is this kind of friction in the adoption, right? All of these advantages that they're building were built for cTrader only brokers or cTrader only funded trader programs. And several years ago, it was very hard to imagine a future of there not being a MetaTrader, right? So it was a long-term decision that really relied on the market changing. And as we can see today, the market has, it's changed substantially. So these ancillary features that they've built on top of cTrader for payment processing, customer relationship management, engagement, analytics, that gives you like all of these add-ons to understand your business and your users and your transactions inside out. You can actually use them because it's all going through one platform. And not just on the brokerage side of things, they've got a lot of incredible features for the traders as well. So one of the features that some prop firms have restricted, which I think is a shame, is fixed API trading. So I think it was probably 8 years ago, they released this like outbound fixed API interface to be able to connect whatever you want into cTrader and just trade using fix. Something pretty unheard of for retail traders. But now we have more platforms being used by prop firms. This is very cool because you don't have to deal with these like native APIs, right? So one platform has one type of API, cTrader has another type of API. But with fix is fix, right? It's completely standardized, which means that you can take your application or your script and connect it to various trading interfaces.
Yeah, that is very interesting. I didn't actually know that cTrader had a fixed API for retail traders. That is a first, definitely for for the industry, or was it first when they launched it? And I guess I wanted to wrap up our conversation and also sort of look into the future, but not from the regulatory standpoint, but from the financial product standpoint, which I just mentioned. I've spoken to I've spoken to other executives in this industry segment, and I said, options, especially options, and futures are becoming very, very popular in specific regions of the world. And, I'm asking people, do you see funded trader programs and businesses such as yours venturing into those financial markets as well because of their popularity? And, I would say for some retail investors, there's a lot of interest in those markets as opposed to your traditional OTCFX and or CFD type products.
I'm actually the wrong person to ask about this because being a European, I've maybe traded one or two futures contracts in my life. And I think the reason why futures are so popular in the US and some other markets, like I think they're very popular in India as well, because there is no CFDs. I think CFDs are one of the easiest contracts to understand from the trader's perspective because they just roll every day. There's no expiry. They trade it even when the futures markets are closed. So they're just continuously trading and open. So it doesn't even matter about your time zone, really. So I think if CFDs exist in a region, then I think they will always be the prominent instrument that people are using. And in the absence of CFDs, as you said, people are speculative by nature. So they're just going to find the next best thing, which is futures. And I think futures are great. And it's very interesting that some prop firms are starting to look into futures and offer futures because they are exchange traded, which makes them incredibly transparent. You can see everything that is happening with the contract, right? The price origination is clear and transparent. The execution is transparent. So I do think that's very interesting from the perspective of having to maintain trust with the user, because that was always the problem with OTC products like CFDs, is there is a huge lack of transparency, and that's why all of the reporting regulations came in, right? Because to make you accountable to someone, right, that even if you're not sending trades to the market, you're not doing anything you shouldn't be doing, and you're at least just being fair with the pricing. To conclude your question, I think if CFDs are available, then I think they will always stay in focus.
Great. James, as a parting question, I always try to ask my guests something personal. You mentioned that PipFarm has an element of gamification with the incentives and things like that for traders. I'm wondering, is James into video games of any sort on the phone, on a PlayStation or Xbox or anything like that?
Good question. Actually, no. I haven't played games for probably since I was 18, but I do relate and I do appreciate. The penny kind of dropped because Discord is very prominent in the funded trader space. Like every firm has their own Discord server, and then there are also sub-communities of traders who are talking about trading. And when I was at my previous role at Nordic Funder, and we had our Discord server there, what I realized at 11 p.m. on Friday night, so I'm plus 1 hour ahead of the UK, so when the messages stopped coming, everyone's status, you can see they're playing Fortnite, they're playing other games. And I thought, wow, these guys, like, as soon as the market closes, they start playing video games. And that's when I realized, like, this product could really relate to the kind of people who are trading, because I think traders who view trading as kind of gaming, because if you think about it, is like one big game, you're not really impacting the economy when you're trading, right? It's not like you buying a few shares of Apple, or you buying a half a lot of Euro USD. It's not going to move the market in any way. You're not helping any of these companies increase their capital, you know. So on the grand scheme of things, yes, it's important to the economy, but on the micro level of you as the trader, it's just a game. It's just you competing with the funded trader firm, you competing with the broker, you competing however you want to view it. You're competing with someone. And, a lot of traders have this belief that if they're winning, someone else is losing. If they're losing, someone else is winning. So it does become a game in itself. So the idea of making the game a game and, but it's more about the reason why the XP program and the power ups is really important for the risk management approach of the firm is you don't have to just give everyone everything they want in the beginning. And that's one of the flaws that we have in the industry is having the lowest price, having the highest profit share, having the lowest profit target, having the lowest drawdown. When you combine all of those things together, you have a very difficult product to manage. But if you allow people to have these perks, right, an extra percent of drawdown, a lower 1% less profit target, if you let them earn this as you gain experience from this user because you get to learn more about their trading style, it's very rare to be able to evaluate a trader based on their first session. So even if they've passed your evaluation, you funded them, you still don't know enough to really trust their trading yet. So your current evaluation is it's better not to listen to their trading signals. But if you keep them engaged with these XP points and reward them with more features, more perks, better conditions, basically, you get a chance to learn more about them and they get to have a better experience with the product. And because they have these features, they will connect better with the product. They've kind of got something that they won't be able to get if they go somewhere else. So it all kind of ties in with the risk management element as well. It's not just a gimmick or a way to differentiate ourselves. It does play a really important role in risk management.
Thank you. That's a really great point. But James, before we part, I want to know what was your favorite video game when you were younger and when you were still playing?
Yeah, the game I probably spent the most time on was Counter-Strike. We used to have
the original, like the original.
Which one was it? CS:GO or Source? I can't remember. I can't remember. I would need to log into my Steam account and find which one has thousands of hours. But every Friday night we used to do LAN parties in the Spotware office. So we'd play Counter-Strike.
Yeah, I remember.
Yeah.
Sorry.
Yeah, we would play until midnight until the market closed and they had to close the office. Yeah.
No, definitely. Those were definitely very fun games. And I remember being able to do multiplayer with people around the world, and all this stuff. And this was all sort of new, right? Back then in a sense. So, yeah, that's really cool. You brought back a lot of nostalgia there. Well, James, I wanted to thank you for taking the time to speak with me today, sharing your insights and your experience in the industry, working with the guys from cTrader before, and your perspectives on funded trader programs, what we call the prop trading industry, regulations, and everything else. It's definitely been very eye-opening for me personally, and I hope our audience as well. I wanted to wish you the best of luck with PipFarm as we move forward, and I hope to touch base with you soon.
Yeah, thank you so much for having me, and it's really nice to chat again. It's been quite a few years, I think.
Yes, it has. Thanks, James.
Bye-bye.
Have a great day. Thanks for listening to our latest Finance Feeds podcast episode. For sponsorship opportunities or to become a guest, please email us at info@financefeeds.com.